Hello and welcome to another session of the My Solo 401k Financial My Community Daily Webinar Series. We're here today to discuss Fidelity Mega Backdoor Roth IRA, how to contribute $70,000 to a Roth IRA at Fidelity in 2025. So thank you so much for joining. If you're on YouTube or LinkedIn or Twitter or any of the platforms that we're streaming on, if you subscribe to the channel, you'll get notifications of when we go live. You can post questions. We love to field questions. So if you have some questions, we'll take those questions now and answer them. But we do want to get to the content as well. Again, how to contribute $70,000 to a Roth IRA in 2025. So as always, the presentation is being provided for educational purposes only. It should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So if you do subscribe, we'd like to bring lots of content. And if you hit that notifications bell, you get notified of when we go live. For example, the last couple of weeks, we've been talking about the magic number of how much income one needs to be able to maximize contributions to a solo 401k. Tomorrow in the morning session, we'll be back to discuss how to borrow from your Charles Schwab self-directed solo 401k. And then in the afternoon session, we'll talk about how to contribute $70,000 to a Roth IRA at Schwab via Mega Backdoor Roth IRA transaction. So let's start with the basics though. In terms of a Mega Backdoor Roth solo 401k, individuals may have heard of a Backdoor Roth IRA, and that's a strategy that individuals who make too much money and who still want to contribute to a Roth IRA will employ to be able to have funds deposited into a Roth IRA. So a Mega Backdoor Roth solo 401k is for individuals who are, number one, eligible to set up a solo 401k because they're self-employed with no non-owner, non-spouse, full-time W-2 employees. And then number two, work with a provider like us that allows them or that supports a plan that allows for Mega Backdoor Roth contributions. And with that type of plan, the individual is going to contribute much more, going to be able to contribute potentially much more to a solo 401k or to a Roth IRA via the solo 401k, for example, up to $70,000 for 2025. That's how we came up with that $70,000 figure. So let's lay the foundation. In order to be able to contribute $70,000 to a Roth IRA at Fidelity, you need to be eligible to set up a solo 401k. So that means you're self-employed with no full-time W-2 employees. Number two, you work with a provider like us that offers a plan that allows for voluntary after-tax contributions and then transfer out of the solo 401k to a Roth IRA, so in-service distributions, which our plan certainly does. That will help with all the compliance steps. For example, you have to deposit the after-tax funds into a separate after-tax account. And then when you transfer the money out of the after-tax account over to the Roth IRA, that's going to be reportable on a 1099-R. So we handle that ongoing compliance support for the Mega Backdoor Roth solo 401k, including preparing the 1099-R as an optional free service. In other words, no additional charge. So you have to make the contribution by the applicable deadline. So if we're focused on after-tax contributions, those contributions can still be made for 2024. So if someone, now the deadline is going to depend on your business tax return deadline. So let's assume you've got somebody whose business is taxed as a sole proprietor, right? There's a two-step process. You first have to deposit the money to the after-tax account before it gets moved over to that Roth IRA at Fidelity. So if your business is taxed as a sole proprietorship, as long as you set up a plan in time to make the contribution by the business tax return deadline, including any timely filed extension here in 2025, so April 15th or October 15th, if you file a timely extension, then you could still make an after-tax contribution for 2024. And that would be up to $69,000, assuming you got the self-employment income to justify it. For 2025, the after-tax limit went up to $70,000. And if you set up a plan anytime here in 2025, that'll preserve the ability to make the 2025 contribution all the way up until your tax return deadline, including any timely filed extension next year. Now, so if your business is taxed as a partnership or an S corp, right? And you want to be able to make 2024 voluntary after-tax contributions, as long as you set up a plan in time to make the contribution by the extended tax return deadline, since obviously we're after March 17th. So if you file a timely extension for your partnership tax return or your S corp return, the 1120S for 2024, that'll give you until September 15th to open up a plan with us and make that 2024 after-tax contribution. You'll be able to contribute 100% of your self-employment compensation, dollar for dollar, up to $69,000 for 2024, assuming you don't make any other contributions to the solo 401k. For 2025, you'll be able to do up to $70,000, so 100% of your self-employment compensation, up to $70,000. So, for example, for a business tax as an S corp, that's going to be the W-2 wages from the S corp. And then if your business is taxed as a C corp, again, you'd have to set up the plan in time to make that 2024 after-tax contribution by your 2024 C corp tax return deadline, including any timely filed extension. So April 15th or October 15th if you file a timely extension for your 1120. And then, of course, there's plenty of time to be able to set up a plan and make 2025 contributions. So that goes over the deadline in terms of that first step, the contribution. Now, there is no deadline to transfer the money from the after-tax over to the Roth. So the first step is you deposit the after-tax contribution into the separate after-tax account, and then it gets moved over. In this case, if we're talking about to a Roth IRA at Fidelity, it would be to a Roth IRA at Fidelity. So a lot of folks will want to have their after-tax account for their solo 401k at Fidelity. That's the most popular place for our customers. That would be a free brokerage account at Fidelity for your solo 401k for those after-tax funds, and then move the money from the after-tax account over to the Roth IRA at Fidelity. That first step, that after-tax contribution, that doesn't need to be reported on the business tax return or the personal tax return. But the second step to move from the after-tax to the Roth IRA, that is reportable on a Form 1099-R. We have a form that customers use to provide us the information we need to prepare the 1099-R. If you go to mysolo401k.net/forms, you'll be able to easily find that form. You can submit it 24/7, add your plan to the queue, and then that would be prepared by the following February. So, for example, if you're converting the money here in 2025 from the after-tax solo 401k to the Roth IRA at Fidelity, that would be reported on the 2025 1099-R, even if the contribution was made for 2024, because it's reported for the year of the transfer. Again, no deadline to convert from the after-tax. Really, the deadline is to that first step to contribute to the after-tax, but no deadline by which someone has to convert the money from the after-tax solo 401k to the Roth IRA. It's still going to be reportable, even though it's not taxable. It'd only be taxable if there was some maybe small gains that accumulated in the after-tax account before they got moved over to the Roth IRA at Fidelity. Here's just some visuals to show, the account setup where this person has 3 different accounts. This person maybe is moving from the after-tax solo 401k to the Roth solo 401k. But if we have somebody that's moving from an after-tax solo 401k out of the plan to a Roth IRA at Fidelity, it might look more like this. Maybe they just have a pre-tax solo 401k for their pre-tax solo 401k funds. Then they got that after-tax account to be able to facilitate making those after-tax contributions before they get transferred out of the plan to the Roth IRA at Fidelity. As always, you can learn more in our community. We have a vibrant community of over 30,000 members. People are posting in the forums every day. So it's a great way to learn, to share the knowledge. All are welcome. It's totally free to join. Just go to mysolo401k.net/my-community. And then, as mentioned, also, if you just follow us on our different channels, whether it's YouTube or LinkedIn or Twitter, we do host daily live Q&As. So it's a great way to also just come and ask questions or hear what other folks are asking. And so we've got some questions. So thank you so much for bringing it. Appreciate the participation. And if you are finding this to be helpful, if you could please like on YouTube, help us get the word out. Just your participation and helping us get the word out is instrumental. And it's as easy as just liking on YouTube. It helps us get the word out to other entrepreneurs just like you. It helps share this information. We appreciate it. All right. So we're in the process of opening Schwab accounts with you. The apps you sent us were set up as participant 1 is listed as co-trustee and participant 2 accounts and vice versa. Will this limit each other's ability to independently manage respective accounts? Example, the way it is now, we must each sign off on each other's account applications or take other actions. We want to be able to independently manage our respective individual accounts. Any issues if we remove each other as co-trustee? Well, so thank you so much for the good question. So if there are 2 participants in the same solo 401k, let's say it's a husband and wife that are both working in the same business. If each spouse is going to participate, then each spouse under the rules needs to be a trustee. And so that means that each spouse will be listed as a trustee. Now, each trustee can act independently, right? Under the trust rules, the plan rules, just one person can act on behalf of the plan. So even though they need to be listed on the applications, just one person, for example, can make trades or make investments. It's not possible to remove one of the spouses as trustees or one of the participants as trustees if they're both going to participate. Now, if only one person is participating and the other person is just listed as a trustee but not participating, it is possible to remove that person as a trustee. But if later that person did end up participating, then that person at that point would have to be added back as a trustee. And if that's what you want us to do, and that only one of the individuals is participating, please just email us. You can email us at support@mysolo401k.net, and we can update the documents accordingly. Thanks for the good question. So thank you so much for the participation. Like I said, if this was helpful to you, please helps us get the word out to other entrepreneurs like you to participate in, helping to share this information. So we appreciate that. All right. Well, I'm not seeing any other questions at this time. We'll just give it one more moment to see if anything comes across. Oh, here we go. So when it comes to trading at Schwab, based on we've had thousands of customers open up accounts at Schwab, and many are situations where there's 2 trustees. And based on experience and client feedback, one participant who's one of the trustees is certainly going to be able to act on behalf of that account, because ultimately the trust documents that govern the account, meaning our plan documents, allow just one of the trustees to act on behalf of the plan. So I don't recall Schwab ever pushing back on that or anything like that. But in the event that they wanted to see that one of the trustees is authorized to independently act on behalf of the plan, then that is certainly something we can help provide that type of documentation to Schwab. So I don't anticipate any of the issues that you're referring to. But please keep us posted. Thank you so much. All right, well, we'll be back tomorrow with more content. Until next time, take care. Thank you for the opportunity.